Alright, what up guys? Welcome back, welcome back. Got a quick update for you. And as always, it's subject to change. Keep on taking the market day by day. But right now, things are kind of setting up for a short. So, interestingly enough, I'm not the only one thinking we're setting up for a short. So you've got the put-call ratio here. And today we closed above 1. Yesterday it closes up here at 1.2. Anytime the put-call closes up there above 1, everyone and they mama is getting the puts, loading up on the put side. So last time we were up here, October 4th, you had that big spike through 1.2, and then about 2 or so days later, so there's October 4th, and then a couple days later, you got that short squeeze. So everyone gets a little bit too bearish, everyone looking for the flush to the 200 SMA. They lean in a little bit too heavy in the puts, and you got the short squeeze. So, keep that in mind. The charts say we want to go lower. The signals say we want to go lower. Everybody buying those puts, it might be a little bit tricky. So, the only thing I think the bulls have maybe got in their back pocket right now is trying to get some sort of short squeeze. Pull the market lower, get everybody into the puts, and then try to pump it and try to shake them out. I don't think they can shake them out if we're under 44.50, 43.50. So if we're under the 21 EMA, I think any bounce you're looking to short. If they can get it back above that 43.50-ish, maybe they're trying to take it a little bit higher. But alright guys, so reason to short number one. We got the weekly squeeze here, and it's the first weekly squeeze since that bad boy back in April and May, which obviously fired to the upside. So a couple basics of the squeeze, or the big three squeeze to be a bit more specific. Whenever you have a squeeze printing, if price continues to hang out under the 21 EMA, so right now we're shaping up for 1, 2, 3, 4, 5 weekly closes in a row under that 21. That leans towards that squeeze might want to fire short. And then take the big three squeeze momentum histogram. You'll notice back in November of last year, momentum finally crosses back above the zero line. From there, they take that momentum and they do push it higher. And now for the first time in a year, momentum breaks back under the zero line. So we got momentum issues. And the longer we're hanging out there under the 21 EMA, the more we begin to develop structure issues. Combine the structure issues with the momentum issues, you get a squeeze that might want to go lower. So again, you're looking at like 43.50-ish. If the bulls can actually get this back above the weekly 21, then we might not see the squeeze break short, at least not immediately, under that 43.50. I think down she wants to go. So the weekly squeeze and then the daily squeeze, which is not getting a good report card here on the Big 3 score. Big 3 score of -8. So perfect score for the Bears is -10. And, momentum. See how they try to get that little cross? Alright, they push the price higher. Momentum gets a little bit above that zero line, and then right back down. Never a good thing for the bulls. They tried taking it higher. They tried fixing that issue. Close, but no cigar. So momentum back under zero, and then structure here's not the best. You got price under the 50. Price is under the 21 EMA. The 21 is under the 50. And now everyone is looking for a push here towards that 200 SMA. And remember, we got pretty close to it last time. We didn't actually test it. So decent chance here if we do get another flush. We're probably going to physically touch the 200. A little bit of physical touching. And then maybe a bit lower down to 4,200. So you've got a weekly squeeze hanging out under the 21. You've got the first weekly break in momentum since November of last year. We have what is on my indicator, a perfect daily squeeze setting up for a short. A+ setup, and then down here on the 4 hour, squeeze on squeeze. The 4 hour looks poised to fire short as well. Big 3 score is -8. We are under the 200, under the 50, and under the 21. So now if momentum goes below 0, pretty good chance a 4-hour squeeze will break short. If the 4-hour squeeze breaks short, there's a pretty good chance that's going to trigger the daily squeeze. If the daily squeeze fires short, there's a chance that might go on and wake up the beast here on the weekly. So again, back above 43.50-ish, the bulls might have a fighting chance. And maybe they try to slingshot the squeeze higher. Under 43.50, you want to short that next bounce. So in a perfect world, tomorrow I would love to see a bounce back towards, the hourly 21 EMA. So I'm thinking in terms of risk-reward. Right now, my line in the sand is 43.50. So if I get short, if I sell the calls, I buy my puts, I'm going to take off my short back above that 21 EMA. So there's my line in the sand. And now my target here for a short, we'll call that 4,200. I've got my exit, I've got my target, I've got, at the moment, what is a good setup for a short. And now I got to make sure, based on my entry, if the trade works, I want to make a lot of money. If the trade doesn't work, I want to lose a little bit of money. So that's a function of, trying to take your short entry as close to that line in the sand as possible. I don't want to short it down here at 42.30 and then take the $100 on the chin. But if I can short it at 43.30, a little bit different. So yeah, for tomorrow, we're looking for a bounce back towards, process of elimination. If they take it back to a 15-minute 21 and she keeps pushing, then you might be looking for a short at the 30-minute 21. If they push it through the 30-minute, you're looking for the hourly 21. And then much above that, I might not want to short it. So that, my friends, is the plan for tomorrow. So for all of you in the mastery, I'll be live tomorrow at 10:30. And if we got a bounce to short, we shall short it. And then aside from that, guys, been doing a lot more futures trading as of late. Now, I'm not actually trading the futures. I'm trading the options on the futures. But my goal right now is $1,000 per day. And all I'm doing is looking for squeezes. I'm watching the big 3 signals, trying to figure out the path of least resistance. And then I'm selling credit spreads on the other side of that. So yesterday, we had the 4-hour squeeze here in the ES. Under the 50, the 200, the 21, you got a sell signal. So I got short last night. I sold the 43.75 call credit spread for today's expiration. So basically placing a bet that we're not going to go back above that 4-hour 50. And then by the time I woke up this morning, I had about $900 of profit. So I cashed it in. Close enough to the daily target. And then today, we did have a little bit of a bounce there in the afternoon. The bounce failed to take the S&Ps back above a few key levels, mainly back above that 4-hour 21 EMA. So I shorted it again. Now I'm shorting it today, but this is tomorrow's trade. So this is my trade for tomorrow to try to make that $1,000. So I've got the 43.60, 43.75 call credit spread, and right now we're up about $600 or $700. So putting aside some huge rally tonight, I'll get my exit order working, and then ideally wake up tomorrow to close to $1,000. But all right, guys, there you have it. Weekly squeeze, daily squeeze, 4-hour squeeze. Everything leaning a little bit short. But be careful about shorting in the hole. Right? Everyone looking for a flush towards that 200. And who knows, maybe tomorrow you wake up and there we are. But as we know, when the collective market leans a little bit too much into the calls or leans a little bit too much into the puts, that's where there's room for a little bit of rug pulling. And I don't want to be a part of no rug pulling. So we'll see what's up here tomorrow. We'll see what's up into next week. And then one more look here at the QQQ. Meta, Google, couple tech stocks have been trying to keep the ship afloat. QQQ does not look the greatest either. We're under the 50. We're under the 21. If momentum goes back below the 0 line, back down she goes. And then for the weekly squeeze, it's a little bit like the S&Ps. The structure is a bit better. You are hanging out above the weekly 21, but peep that momentum. Crosses positive last December. They're pushing, and now you get that negative break. Sketchy stuff, my friends, to say the least. And then 4-hour squeeze here on the QQQ. Under 370, she should fire short. But alright, y'all, we got Thursday Night Football coming up in about a couple hours here. I'm going to go with the Jags. Jags over the Saints. But alright, guys, as always, thank you for watching. If you haven't already, hit the like and the subscribe button. Drop a comment down below. Let me know how your week is going. And then, Mastery members, I will see y'all tomorrow. Adios, guys.